Hello, everyone. This is Noah and John, and it is Friday. So you're going to get your weekly Manhattan market update. Johnny, let's get right to it. I'm looking at supply. We're coming in at 73.47. Turn it around. Show me the chart.
Yeah, that is the first increase in supply on a weekly basis that we've seen since mid-November. And I mean, we've been talking about this for weeks. It's really not a surprise because we are slowly getting into the spring active season, and this is the time when the actives come on. So that's your
Right.
first increase in a while.
Yeah, and just like we talked about peak supply, right, happening back in late October, early November at around 9,600, and that was going to go down until the next listing cycle. Guess what, John? We're in the next listing cycle. And so on the other side of the coin, that's just going to start going up. Where do we go? I don't know. Do we supersede the 9,600 level? That's the big question.
Yeah.
Let's move on to pending sales, the measure of demand. We came in at 3271. Show me the chart.
Well, pending sales, I mean, it's still going up. No, that's 2% from last week. And, pending sales here is still outpacing supply. So that's a great way to start this new season.
Yeah, and that means the market pulse is going up, and that's your real-time leverage. That's how you know. So in case you want to just have something that's nice and easy to read and not have to, interpret all these different signals, the market pulse is where to go, Johnny. And when I look at the market pulse, I just want to point out that we added a neutral zone going across here that is now in the middle of both a buyer's and seller's market. For you data nerds out there, that will represent one standard deviation in the total aggregate data set. And, it's interesting to look at it because we just kind of dipped out of buyer's market territory and into neutral because of the recent strength over the last 3 months.
That's right. And it's going to be a race here, Noah, as pending and supply, pending sales and supply sort of, rally against each other going forward.
Yeah, and I would expect this to turn down. I would expect this to be peaking up and turn down in the near term. We will just see. Let's go to the main page here. Let's look at the weeklies. I'm looking at 1 week supply. How much stuff came on the market? 306. Johnny, show me the chart.
Well, 306, that's about 10% more than we had last week. And last week was about 10% less than the week before that. So we're sort of back in neutral territory. More pertinently, though, that's down roughly 15% from the year ago basis. And January last year was still sort of on track as a normal month. So supply is tending on the low side here.
Very interesting. Let's move on to the 1 week demand in Manhattan real estate. How many contracts signed? 242. Is that good? Is it bad? Johnny, show me the chart.
Well, if you're going to ask me if it's good or bad, I'm going to tell you it's good because that's up 36% from the last week. The last week before that was down because we had that holiday during the Martin Luther King Day. But, again, if we're going back and looking at year-over-year comparisons, supply is up 25% compared to this week last year. So, again, on the current basis, pending sales, the contracts are running hotter than supply. And on a year-over-year basis, we're looking at just demand is beating supply right now.
Excellent. And I just want to flip to the 1 month look at this whole thing and point out, guys, right here, that when I look at these changes right here, supply is up 64% month over month, contract signs over 20% on a month over month basis. But, this is your glimpse. We're about to go into February now, and we're going to get our first look at January's numbers. So this is your way of saying which way is the month headed. And that is your look right there. So let's shift. Let's go outside. We like to go outside. And, John and I were having a conversation, and there's a lot of buyers out there that want to have a general understanding of relative value. So what we did is we looked at Q4 closed sales, and we went back all the way to 2015. So you look at a Q4 2015, 16, 17, 18, et cetera, et cetera. And we broke down the co-ops, we broke down the condos, and I'm going to show you by bed count. Okay, John? So this is what the chart looks like for studios and one bath apartments. The red is condo, the blue is co-op. And again, when I look at this chart and I'm trying to figure out where are we, the highest numbers in 2017, and we're down about 15%. On the condo side. And when I look at the co-op side, we're down about 10%. Okay, that's on the studio side. So what do you see here, John?
I see the same thing. And, one of the things that's really evident in this chart is how stable the co-op market is compared to the condos.
Yeah, and you're going to see that throughout. And as I toggle, now this is the 1 bedroom, 1 bath market, and you're going to see some similarities here. 2017, 2016 is kind of the highest numbers for most of these sectors. And when I look at the condo market in this sector, it's down 11.5% right now from that high number. And the co-op market's down only 7.5%. Okay. Switching to 2 bedrooms, 2 baths. All right. The high right here is 1615. We're down about 14%. 14%. Again, we're trying to figure out where the market is right now. And I'm just looking at some broad numbers, nothing relative to a specific property here. And I look at the co-op market and it's down 9%. Okay. And then finally, we look at the high-end sector, John, and this is where everything changes. This is the 3-bedroom market. Both of these markets are down significantly when you break it down. And when I look at condos, we're down 30% from this level here down to today. And when you look at co-ops, we're down 25%. So this is really the sector that's kind of reflecting what a lot of people would have thought they would have seen, but you really only saw it during a minimal time during the COVID shutdown.
Yeah, you're exactly right, Noah. So if I was going to take all these charts and come up with a conclusion, the conclusion would be that the larger apartments are still on sale at this point. Because you look at the studios, the 1s, the 2s, especially in the co-op range, they're all hanging in that very narrow range. Yes, the condos are down, but they're not down by too much, considering that we were at a peak and we've spent the last several years coming off of that peak. But when I look at the 3 bedrooms here, I mean, clearly they've come down from a high, and I would not expect these to go much lower. I think this is sort of, we're basing out here. If we're looking, just what we talked about, if we're looking at contract activity start ticking up, I think that's only going to be good for the 3-bedroom plus sector.
And I would agree, taking into account the fact that the market is pricing in all the information that we have and where we are in this cycle, I think the hardest hit areas, which is that higher end, you might see them come out of it at a quicker pace at some point. It still just needs to kind of find its way. It's just doing a completely different thing. It's going to be interesting to watch as we go forward. Anyway, thank you, John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. We hope you have a great weekend, and we'll catch you next time.